Becoming a good trader is not easy, and the more I observe the market, the more I realize the difficult part isn't simply finding a good entry, it's understanding what happens after the entry. Because price doesn't always move the way we expect. Sometimes it breaks out of a range and keeps moving, clean, fast, almost as if there is nothing to question. But sometimes, price breaks out, moves higher, and then comes back. It can even return inside the range it just broke out from. And suddenly, what looked like a bullish breakout starts to look completely different. Is the movement failing? Is it just a pullback? Is the new authority still developing? Or is something else happening? This is where I realize something. If I want to understand price movement, I can't simply react to every candle, because a chart can contain hundreds of candles, and every candle can make the market look different. One candle gives you confidence, the next one creates doubt, then price moves again, and suddenly your entire interpretation changes. So I started looking at the chart differently. Instead of asking what every candle is saying, I started looking at where the important movement actually begins and ends. And that small change in perspective made the chart much easier to read, because between two important endpoints, there can be a lot of noise. There can be many small movements, many candles, many temporary pullbacks. But the important question isn't always, what did every candle do? Sometimes the better question is, where did the movement actually go? And once you start looking at movement that way, something interesting appears. Not every bullish movement has the same character. Some movements immediately expand away from their original range. Others break out, come back, test the authority, and only later begin to expand. From the outside, they can look completely different, but they can still be part of the same development. And that led me to another question. How do we know whether a new authority is actually becoming stronger? Because a breakout alone doesn't tell the whole story. A new authority can exist and still be vulnerable. It can move higher and still be vulnerable. It can even look impressive while still having the potential to return to the original range. So I needed something that didn't just tell me where price was, but helped me understand how developed the new authority had become. That's when the idea of status became important. Not to predict the next candle, not to tell me exactly where price would go, but simply to give context to the development. Vulnerable, safe, strong, very strong, extended. Suddenly, the movement wasn't just a line going up and down anymore. It had a development. And that changed the way I looked at holding a position. Because when you don't understand the movement, every pullback can feel like a threat. Every red candle can make you question the position. Every small movement can make you think something has changed. But when you understand where that movement sits inside the bigger development, you don't have to react to every fluctuation. You can observe, you can compare, you can understand, and most importantly, you can remain calm while the movement is still developing. That's what I think is often misunderstood about becoming a good trader. It isn't just about learning more entries. It isn't about adding more indicators. And it isn't about trying to predict every move before it happens. Sometimes, it's about spending enough time observing price that you begin to recognize its different characters. Then building a map. Then understanding why each part of that map exists. And finally, integrating everything together. Because the entry has a purpose. The risk reference has a purpose. The movement map has a purpose. The authority status has a purpose. And when those things are connected, you no longer have to treat every candle as a new decision. You have a framework for understanding the movement that is already happening. And that changes something very important. You stop trying to control the market and start trying to understand it. Because the market doesn't have to become predictable for you to trade it with confidence. You just need to understand enough of the movement to know where you are, what has developed, and whether the movement is still worth following. And maybe that's one of the biggest differences between simply trading and becoming a better trader. Not predicting more, understanding more. If you want to see more market observations and the way I read price movement, follow the journey here on Bias Positive Digital Rise. Subscribe to the channel and let's continue observing the market together.